Hey guys, welcome to a new video. Today I'm going to be talking about ULTY from YieldMax and COYY from GraniteShares. Now I do hold both of these, and if you've been watching some of my previous videos, I have actually been reinvesting some of my distributions, some of my money into ULTY every week, buying about 50 to 100 shares of ULTY every single week. But I am changing that strategy slightly. So going from ULTY into COYY, what's the best strategy? What am I doing? That's kind of what I'm going to be talking about today. But before we get into that, we did actually have announcements for Group A YieldMax yesterday, and of course that includes ULTY, which was I just hit that 9 cents. Because it's been pretty tumultuous, if that's the word, a week for stocks. There's been a lot of red. And ULTY's been suffering, the whole market's been suffering a lot, to be honest. It's been very volatile. So I wasn't sure we were going to get the 9 cents from ULTY, but we did. So I'm actually pretty happy with that. That's quite good. Snowy, doing really well, $1.12. And the reason it's done so well is because I sold that position a couple of weeks ago. Of course, I sold it and it just went on a tear. It was ripping. I think it had earnings. I don't know. It's been going nuts. So, of course, it's just doing really well after I sold it. What not to expect, right? But yeah, that was kind of the pick of the bunch. Everything else is kind of average. I used to have Tesla, but I sold my full Tesla position about 3 weeks ago. Just not so bullish on the Tesla ETF anymore, or even YieldMax, just the uncapped side of Tesla and the YieldMax ETF. So I sold my position into that and reinvested elsewhere. So I actually don't hold any of the Group A monthlies anymore. All I've got is ULTY and LFGY. So that's all I'm getting from this week from YieldMax. Oh, and SOXY, but that's more of a growth ETF. It just pays a real small amount, 12%, and it's more of a growth fund. So LFGY, 44 cents, really consistent. I'm pretty happy with that. 9 cents from ULTY, happy with that considering the state of the market. And then, of course, I had all my distributions from ROUNDHILL. So YETH, HOOW, so that's the Robinhood, AMDW, COYY, whatever you want to say it, MSTU, MicroStrategy, ROUNDHILL one, AMZWA, that's the Amazon one, PLTW, NVYY, and I've slowly been getting into these GraniteShares YieldBoost ETFs, and that's kind of what we're going to be talking about today. So COYY, that's the one I'm most bullish on. As you can see, last week, or at this time of the distribution announcement, I had 349 shares, which came out at 68 cents per share, which is a weekly distribution or amount paid to me of $317 net. That's Australian, by the way. But then, as you can see, I've slowly been increasing my position in COYY. And also been getting into NVYY, which is the NVIDIA GraniteShares YieldBoost ETF, and TSYY. So I sold my Tesla position in YieldMax, waited for a bit of a dip in TSYY. There was a bit of a dip this week when the whole market was red, and I pounced. So I bought TSYY, I got in there with 158 shares. All right, so now I'm still bullish on ULTY. Well, not bullish, but I like ULTY. I think it's a good fund. It pays a good distribution, usually over 80%, so I like it, and that's the reason I've been reinvesting, buying 50 to 100 shares each week, kind of DCAing into it. But my strategy has kind of changed. Now, before we get into it, ULTY, if you don't know, is the YieldMax Ultra Option Income Strategy. It basically invests in a number of different underlying stocks and then uses a covered call strategy on that to make income. And you can see here the distribution rate is 87%. Most people will probably know on this channel what ULTY is. Most people are invested in it. It gets a lot of hype. And it is a great ETF. I'm still holding it. I've got almost 2,000 shares of ULTY, and I'm not planning to sell them anytime soon. I might continue to reinvest, but at the moment, I can't look past COYY and some of these GraniteShares ETFs. Now, I've touched on them before, but what are they? So the YieldBoost ETFs, they essentially create income. Here we go. They generate income from option strategies linked to 2 times long. This is Coinbase stock. This one's for COYY, so it's the Coinbase ETF. 2 times long Coinbase daily ETF. So it's creating income from a leveraged ETF. So that's why it's able to not make 80–90%, it's essentially able to double its distribution because it's a leveraged 2 times long. That's what it's making its income on. Its option strategies off a 2 times long leveraged ETF. And that's why it's almost able to double its distribution and pay a whopping 180% distribution, which is just nuts. So that's what it does. It's quite different, obviously, to the YieldMax. YieldMax doesn't trade and generate income from option strategies on anything leveraged or anything 2x long or anything like that. It's not. This is obviously more risky. This is a risky play. And before you start like shifting all your money into this, know that this carries more risk. This is not financial advice. We don't know what's going to happen to the market. If Coinbase goes down dramatically, this will probably sink. So this is a more risky play. It's obviously got that high distribution rate. So, you know, if you invest 10 grand and the NAV stays stable throughout the whole year, then you'll essentially make $18,000 off your $10 because it's 180%. But that's based on the fact that the NAV stays stable, which it's going to be very hard to do if it's paying out such high distribution amounts, which we know with YieldMax. As soon as it pays a large amount, it takes that amount off the share price, and then it's trying to recover that share price to try and keep that NAV stable or even grow, which is quite hard to do for a lot of the YieldMax ETFs. So that's kind of my concern with it. How does it maintain that NAV, not have a lot of NAV erosion when it's paying such a high distribution of 180%, because that really is just a crazy amount. But as you can see, it's been pretty consistent. Now, if we look at, so what's my strategy is I was, like I said, DCAing into ULTY every week. I've been growing this position almost at 2,000 shares, but I'm now essentially DCAing into COYY. And the reason is because Coinbase has had a pullback. So you'll see here, this is the Coinbase. Yep, this is the Coinbase stock. So Coinbase was tracking really nicely, and then it's had a big pullback here, and this is like a 30% drawdown. So this is pretty big pullback, and now it's kind of consolidating around this, level of support around $300 around here. So it's kind of consolidating here nicely, and it's, in my opinion, not a crystal ball, that we're going to have a pretty big Bitcoin and crypto bull run towards the end of this year, October, November time. Don't know for certain. Depends on if the Fed cuts rates, depends on the liquidity, all these sort of situations. No one actually knows what's going to happen. But according to my research, I believe that it will get back up here, probably around where it was at its all-time high of 433, or even further if we have a really big crypto bull run where the alt season really kicks off in October, November, which I do think it will, according to what I've been researching. But like I said, don't take my word for it. So that's my rationale from moving from ULTY and DCAing into that, because even though that might stay stable in terms of NAV, I actually think that Coinbase will grow quite significantly over the next 3 or 4 months. So I'm kind of hedging my bets based on my thoughts and my research on that, and I'm putting that into something that I think will both grow and also pay a distribution that's essentially more than double what ULTY pays. So I just can't ignore that. So that's why I'm taking the slightly extra risk and putting it into a leveraged income ETF, COYY, and to get that 180%, but also to benefit from the Coinbase position, because I think it's at a pretty low price point now. I think if this grows back, then the COYY won't go down massively, even if it's paying off those big distributions. If it's paying you 180%, then of course it's going to be hard to grow, because it's having to cut into that net asset value to pay you such a high distribution. So that's my thought process. That's what I'm doing currently. I'm kind of switching my strategy from ULTY to COYY. Now, if we compare the two, we can't really. It's not a fair comparison, because COYY is only a month old. As you can see, started well, and then crypto and everything started to sink a little bit, and Coinbase is down. So as you saw in this one, you could see that it's down like a month ago. It was like here, and then it just starts to sink again. And so this is COYY in orange, and this is YieldToOS in blue. So they're both down in the last month. You know, markets have been pretty bad. But so how do we really assess what it's going to be? Well, or how well it's going to do? Well, I'm going to go to one of the other GraniteShares YieldBoost ETFs, which has been trading for a long time, which is the NVIDIA one, NVYY. So COYY, you can see, like if we go, it's only just, it launched, what, a month ago, or last day, 30th of July, so beginning of August, it went up, and then crypto just gone, and Coinbase went, bam. So terrible. So, but you can't really assess the performance based on that. So I actually think this is a good position of entry, and that's why I've been DCAing into it. Because look at this, just down at anything under kind of $20.50. I think my average price is about $20.80, around about here, because I started investing into it around about here, and it's gone down again, and I just keep DCAing, keep investing into it. But if we take NVYY, for instance, and we go all time, and we can see, so this NVYY is GraniteShares YieldBoost ETF that pays 100%. Now, what's interesting about GraniteShares is they don't change their distribution rate. It's the same every single week. So for the past, 4 or 5 weeks, COYY has paid a distribution rate of 180% every single week. It's not changing like YieldMax's ones do. It's not changing like ROUNDHILL's ones do. It seems to be able to pay 180% every week to the day. The difference is that, of course, the net asset value changes. So if it's from $10 to $9, then 180% of $9 is lower than it is of $10. So the amount that you get paid is different every week, but the distribution rate stays the same. So it's 180% for COYY, it's 140% for TSYY, which is their Tesla YieldBoost ETF, and it's 100% for NVYY, which is this one. So it launched, is this all? So it launched, so the NVIDIA GraniteShares YieldBoost, you'll see it here, it launched in May, middle of May at $25.64. It's been paying 100% distribution annualized on a weekly basis since then, and it has done really well. I was like 100%, and it hasn't gone down. It's been going, it went down initially because of, obviously it's to do with the underlying NVIDIA, and then it's gone up, and then it's been paying its 100% distributions every week, and it even got up to 28. And then of course in the last week or two, NVIDIA's been having a really tough time. That's why I just invested into this, actually, NVYY. I've got a average price around here, $25, $25.50, something like that. And yeah, I mean, if you look at that performance, it's only the last couple of weeks that have been bad. Otherwise, you were getting 100% return, and you would have been up. As of like a week ago, you would have been up a couple of dollars as well. So in terms of share price, $27 when it launched at $25. So just really good, because it uses a put spread. Oh no, it doesn't use it. It uses option strategies. Does it use, yeah, put options? So it uses a put spread strategy. So it's selling puts. I think it's buying puts as well to cap the downside. So to limit that downside. So that's something that YieldMax doesn't really do, and it's a very interesting strategy when you look into this a bit further about trying to protect the downside. And I believe from more research that I've done into this, is that's what a lot of these YieldBoost ETFs are doing. They're trying to protect the downside because they've got such high distribution rates that they're using a put spread strategy to try and keep that downside to a minimum. So really interesting. So I've been assessing their performance over the last month or two, and I'm just really impressed with the NVIDIA one. And so I've bought in here, and of course for COYY. Now I'm more bullish on Coinbase, and I think that this is just a great buying opportunity here. So I've been getting into that just because I think Coinbase will really do really well over the next few months. So my strategy again is to stop. I'm going to keep my ULTY position, but I'm going to stop reinvesting into it. I'm going to stop DCAing into it, and I'm going to be using those funds, the extra distribution revenue that I make, and getting it into COYY mainly, because this is the one. This is the Boost ETF that I'm most bullish on for the next few months. So I'm going to be slowly increasing my share amount here, hopefully get up to 1,000 shares, and then that will be a really nice weekly income. So I made $3,000 over the last week. And that's a bad week for me because Group A, I don't have any of those monthly YieldMax ETFs. So that's just my strategy going forward. So to kind of limit my ULTY position, not limit it, but to stop reinvesting into ULTY and get it in COYY. And I just want to give you a look at this, dividendhook.com. I've mentioned this before, but I just love what these guys are doing. Such a great website. And they basically do all this analysis on the high income ETFs from each of the different companies, fund managers. So, and they'll rank them. They'll do all sorts of cool stuff with it. So you can see what's giving the highest distributions this week. So TSLW was the winner this week, and that's the ROUNDHILL one. COYY, that's second. So these are the GraniteShares YieldBoost ones. COYY, TSYY, NVYY. So these are the GraniteShares ones. And you've got ULTY down here. That's pretty good. 82. I think that's the best performing YieldMax ETF. Got YETH. I hold that. That's Ethereum. Love that fund. And then you've got a lot of the ROUNDHILL ones. LFGY, YieldMax. I'm in that. So really interesting website, dividendhook.com. Take a look. You can go to the treasure map and it shows you, again, a nice visual, of what's paying what in terms of distribution rate, and you can see all the different ones as you get smaller, what each one is paying. Just a nice, you can also build, I think, your own armada of high income treasures, as they like to call it, I think, and you can do all sorts of like calculations based on what you're going to make from your distributions from what you invest in. So really nice website from these guys at dividendhook.com. So definitely check it out. Just thought I'd give them a shout out. But yeah, that's my strategy going forward. Let me know what you think. Let me know if you're staying in ULTY. I know everyone loves ULTY. Please don't take this as I'm bearish on ULTY, that I don't like it anymore. I do like it. I think it's a great fund. I'm going to stay in it. But just for the time being, whilst I'm bullish on Coinbase for the next few months, I'm going to be reinvesting and adding to my shares in COYY. So that's just my plan. But let me know what you think. If you're sticking with ULTY or YieldMax, or if you're getting into the GraniteShares ETFs, or if you're getting to the ROUNDHILL. I think the battle between all these high income ETFs is really interesting. It's fascinating, and it's great for all of us investors, because they're going to be bringing out better products as we go forward, and that's only going to create better investing opportunities for us. So I think it's a really exciting time. But yeah, like I said, let me know what you think, and thanks for listening, and I'll see you in the next one. Cheers.